Today is Tuesday, March the 3rd, and another bloodbath day. But today was different because we had something really unexpected. The Fed made an announcement, an emergency announcement, that they were going to drop the rates by 0.5 point. Totally unexpected timing, but not unexpected move. In other words, the market had already built in the fact that there was going to be Fed relief. So when the market went crazy, and I looked at my portfolio at one time, I think Apple, let's just take a look at what Apple was doing during that freakish period after the Fed announcement. Let's just go to a 5-minute chart here and look at what happened to Apple at 10 a.m. It went from 294 all the way up to 303. And then what happened? People realized that you buy on the rumor, but you sell on the news. So this was expected, and people who were buying on this move up just got creamed. If you were trying to buy or to sell at that time, the spreads between the bid and ask were so large. I was trying to close some short calls, and the bid ask was changing by 10, 20, 30, 40 cents width as I was watching it and trying to determine what price to put in. But remember that I did buy 50 yesterday, and I bought 50 today at 297.58. Do I regret it because I bought right in here, right at that point right there when the price was going up? Well, I felt pretty good about it at first, but I didn't buy more than 50. That was to fill out the lot that I wanted to buy under 300, because I've always said, if Apple gets down below 300 again, I'm going to be buying hand over fist. So yeah, sure, we closed above my first 50. We closed below my other 50. I have a total of 500 shares now. So let us look at the rest of the stuff that we normally look at, which is the stock market advancers to decliners and the McClellan oscillator. And it hardly even moved, even though the advancers were 2,000 and the decliners were 1,000. So about 2 to 1 decliners to advances. But that didn't move the average of the 5% and the 10% trend lines that much. So let's bring in this chart. This is May of 2007 all the way to June of 2009. Somebody posted in my comments yesterday that 666 was actually when Obama took office. It was actually March of 2009, so it was about a month and a half after he took office that the market bottomed out. But anyhow, that's besides the point. What we're trying to do is compare the reaction to the McClellan oscillator now to the type of things that we saw initially when the market started to slide in 2007. And we had this move which doesn't look like a lot, okay? But it was a lot. It went from just under 15,000 down to 666, down to, well, this shows 6,000. So let me take a look at that data. Anyhow, you can see similarities here. We had this big drop in the McClellan oscillator, then 2 days up, and then a similar move, but a higher low, and then a big reaction back. This is what we're going to see here. We're going to see probably another down day tomorrow, but maybe not so much, maybe even up a little bit. But is it going to come to this minus 100 oversold line? No, it's not going to come up there tomorrow. It may creep up there, but we're going to see this kind of jaggedness. Even after we had this kind of bullishness in the late summer of 2007, it still didn't prevent the market from moving down. And we're looking at trend lines, right? We're looking at events that show strength of the the bulls and the bears. And that's what we're going to be looking for here. So we're into this kind of volatility. Is it going to last as long as the recession did, the financial caused recession back in 2007 to 2009? Probably not. I mean, the virus shouldn't last that long before it's brought under control. Remember, we've had SARS, we've had the swine flu, we've had cases of Ebola, not in the United States, but severely in other parts of the world, and they managed to get under control. We are less prepared in the United States, and that's why the market here is pricing in a long hit to the economy of the coronavirus, where people stop going to work and we stop being productive. So now let us look at the charts. The SPX just finished above 3,000, but let's look at a weekly chart from now on, because we're going to look at things in a bigger macro scale. It's no point in looking at the day-to-day activity, because we're in the midst here of something that's quite traumatic. This type of drop that we've seen over February the 20th to February the 29th, a 9-day period, was pretty drastic. So let's back out and let's look at things on a bigger scale. We saw on a weekly basis that the cloud gave support last week to the index. So far this week, we've had a range from 3140 down to 2940. So that's what, 300 points, 200 points. And we're down at the low end of that. And our SMIs are showing still in the oversold area on a weekly basis. Apple, I'm going to skip Amazon and come back to it. Apple down $8, but it was up quite a bit at one time. And it went to, again, we're looking at a week, it went to last week's high and started selling off. Notice that this is a daily moving average on a weekly chart, because you can do that with Motive Wave. And last week we got the bounce off the 200. It's also showing overbought, and volume today was nowhere near what it was yesterday. So no need to pull the panic button on Apple, but we are going to see choppiness. Let's go to Amazon, because what's cool about Amazon is so far on the week, we didn't go to the 200 daily moving average, we went to the cloud. The cloud took precedence as support over the 200. I think that's fantastic. I mean, that's just a testament to how people are trading. I think at least computers are trading using the cloud system, and I think big trading houses are also using it as well. Last week we had a bounce of the Chiku span off the 50 simple moving average, and we're keeping above that for now. Amazon's volume was particularly weak, so don't take today's sell-off as being too important, too critical. 125.11, so down 250 for Caterpillar on a weekly basis. The top of the cloud was perfect rejection last week. Sorry, no, that's not true. My eyes are failing me here. It didn't make it to the top of the cloud, whereas it was the cloud that provided support for it the week before. So we're still looking at the cloud as being resistance, very weak volume in Caterpillar. Hope you still have your shorts on top of your stock. SPLK was looking good. It had resistance today at the 50 EMA. This is a weekly chart. Generally, support is down here. If you look at previous lows and highs, you can see here, 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 this and here. This should be support, and tomorrow is earnings. So what I did is I rolled the dice here. I had 3 contracts long SPLK and 3 contracts short. My maximum loss would have been about $750. I had $1,700 profit in the short calls, so I took the profit, and now I'm totally long with my calls. The most I can lose now is $1,100, which is what I paid for the calls $1,100 more than what I've already lost. No, sorry, my total loss will be $1,100 after taking the profit for the short calls. However, if SPLK after the bell tomorrow at 4 o'clock has good earnings and everything else is in good shape and the SMI is pointing upwards on the slow moving SMI and the volume was much higher than average, then of course my long calls are just going to do great, and that will turn out to be an awesome trade. AT&T down 75 cents. I still haven't filled my position there. I bought some stock at 35 something, and that was almost a 6% dividend. Here we are on the weekly. That's a daily chart. Let's go to the weekly chart, and you can see last week the cloud was support. This week we're trading a little bit lower than the range of the week. That arrow was there for a reason, to show that today resistance was at the bottom of the daily cloud. So on a weekly basis, AT&T still looks like it could walk up this cloud. Look at where the Chiku span provided support for us yesterday, and today we finished just above that candle. That's critical. That should be a launching point for a better day for AT&T tomorrow. So when we come back at the end of the day tomorrow, we're going to look and see if that candle actually did provide a bit of a launch for the Chiku span. I put Google up here to take a look at because the cloud has been important for Google. Yesterday it was resistance. Today it tried to break into the cloud and fell down. It lost the 200 moving average on Friday, regained it on Monday. So it's quite choppy. Volume for the last 2 days has been pretty low, so nothing to get too worried about. We're going to be looking on a weekly basis now, and we can take these out of there, and we could see weakness in Google. It is really at the top of its historical range. Haven't drawn a Fibonacci on that because I'm not trading it, but it would be interesting to see how far we can go. Look for the weekly cloud to be support, and look for the daily cloud to be resistance. What else do we want to look at? Whirlpool down $6. I bought some Whirlpool today. I actually bought 200 shares because I was just so glad to be able to buy it around 130. Well, I'm going to be even more glad to buy some of it tomorrow at 127. But will I? I think if it's got an up day, I might add, but I won't add 200. I might add. Do we have a trend line going here? We had a potential trend line there. So let's just keep watching. Let's look at the SMIs. Sorry, let's look at the cloud. The cloud isn't really playing much of a role here. Let's look at volume, and volume was just a little bit below average. So the thing we're watching is the SPX. Where is the market going? Choppy is the word. If you're buying low, you might want to just take a scalp. If you've made $5 or $6, take it. You're going to have an opportunity to buy low again. Everything is going to chop for the next month, as long as we have the coronavirus edging up in the United States as it is. Now just read the headlines. Not enough test kits, people being turned away from hospitals, not being able to get a confirmation if their cold symptoms are the virus or not. That's putting people potentially back out in the streets to infect people. We had our first case in North Carolina from somebody who was in contact with somebody who was vacationing in Italy. So that's a little bit closer to home for me, where both my kids go to university, and I'm going to be keeping an eye on that. 14 minutes. I'm sorry to go so long. Have a good day tomorrow. Thank you.